Hello traders and welcome to another video review. Today is Wednesday, November 1st, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, there is only one very important event for today, despite the fact that it has three green dots like any other one. Fed interest rate decision, FOMC statement, and FOMC press conference. But before this will happen, there is still UK manufacturing PMI data scheduled for release at 10:30. There is some kind of a slight improvement expected from 44.3 points to 45.2. There is ADP non-farm employment change, and improvement is expected here as well from 89,000 to 150,000. And of course, the ISM manufacturing PMI data are scheduled for release at 3 p.m. together with the job openings, and 30 minutes later with the crude oil investors. The Fed interest rate decision indeed is scheduled for release at 7 p.m. The market participants expect the Fed to leave the interest rate at the level of 5.5%. It's very important to read the FOMC statement and of course to watch the FOMC press conference for any kind of remarks related to the change in the monetary policy by US Fed. So the reason why we are talking about the Fed interest rate decision is obvious, but during the technical part we are going to talk about US dollar, of course, and we are going to start our technical part with the analysis of the euro dollar. For our chart of the euro dollar is showing us very big reversal here on the 4-hour chart. Bearish engulfing pattern was made immediately after the market hits the level of 1.0675 towards the move up towards the level of 1.0695. So while they were moving up, the bears entered and they didn't allow bulls to even test this swing high from the October 24th. So we have a beautiful bearish engulfing pattern, confirmation, and the extension towards the today's intraday technical support, which is being tested right now, 1.0558. So this intraday technical support, let me just give it to you on the chart. So that's kind of interesting. So this is very short-term technical support, bounce, and now breakout. So it's obvious that bears are in charge of the market in the short term at least, and the negative and weak momentum supports this view right now. 43 points only. Next target then 1.0523, then 1.0496, then 1.0449. This is the low from the October 3rd, 2023, so almost 1 month old. The general outlook for the euro dollar is negative because let me just reiterate our point of view. With the Elliott correction wave, maybe we should complete the ABC corrective pattern to the upside, and now we should of course start the first wave to the downside, maybe some sort of the correction, and then third wave to the downside. So we should expect a big spike to the downside if this analysis is correct for the euro dollar. Now, because we are talking about the Fed interest rate decision and stuff related to the US dollar, let's find out what's going on the US dollar index itself. This is the 4-hour chart of the US dollar index, and if we just zoom out, we can clearly see that US dollar index is in uptrend. Okay, it's in the uptrend. So that's my point. The other thing is, let me just zoom into my chart back on, and then swing high 107.32. This swing high will act as a technical of course resistance, important technical support. It's obvious, everyone can see it. This is the ABC movement to the downside termination. So in the situation with the US dollar index, we got the wave A, we got some sort of the wave B, maybe wave C, completed here, just like on the euro dollar. That's inverse correction. This correction is to the downside. The correction on the euro dollar was to the upside, and now we got the first bounce to the upside. So if we want to apply the Elliott wave count, we got wave 1, wave 2, possibly wave 3, wave 4, and wave 5 is still scheduled here some time, at some point of time, right? So of course those are not the target levels, just a visualization of the possible movement to the upside. What are the technical resistances? I think that the top of the wave 1, it's so obvious that we need to mention it. 106.86. Generally the whole area here is rather strong in resistance. 106.76, and one more which is at the top of this high is 106.95. so very strong resistance area, supply zone even, but once broken, then this level here, 107.32, will be violated very easily, because that's a very weak technical resistance. Of course, if our scenario is correct, obviously. Nevertheless, please notice the fact that in the background we have uptrend. So this might be just the correction during the uptrend, so the minor wave correction during the uptrend. So right now the market might be ready to unfold the 5-wave impulse to the upside. Let's take a look at the S&P 500, because it's very susceptible to the interest rate decisions. And let me just find out. Yes, we should zoom out like here, but okay, maybe daily time frame chart would be a little bit better for our analysis. What do we have here? It's like very steady movement to the downside. We got swing high 4,612, lower low, lower high, lower low, lower high, lower low. If you see the pattern here, it's called downtrend at the beginning of the downtrend. So the most important levels are here. Technical resistance 4,324, that's obvious. The other technical resistance is now located at 4,200. As you can see, it was previously the technical resistance as well. And now the market is supposed to be heading towards the level of 4,000 itself, because it's a magnet level. It works as a magnet for the traders. So we got the lows roughly around 4,046. That's the technical support, but it's very weak. And the other one, which is way below 4,000, is located already at 3,820, 809. So that's even worse. All right, if we zoom in here just for this last swing high progression, okay, if we take the Fibonacci retracement, not quite sure if this is okay, that's the obviously we need to do it the other way around. So okay, this one goes here. What I want to know is how much the market retraced already from this lows of 4,000 and something. So we got this movement here. We retrace already 50%, and the 61%, as you can see, is located at the level of 4,117, and this level has been hit. So generally my intuition was correct. We retraced 61% of the Fibonacci retracement, which is the black line, okay, and bounced. And now we are apparently just a little bit range trading. We are trying to pull up, of course, but the range trading is range trading mode is now applied, and the level of 4,180 4,200 will act as the technical resistance. So that's the upper range, and the lower range will be this low at 4,101. So just a little bit below the 61%. So this range might be maintained today, at least during the S&P, at least during the Fed interest rate decision. Then any breakout lower would mean that the bearish pressure is even stronger. The movement to the downside is even stronger, so we should expect at least test of the 4046 and then 4000 level as well, because any kind of surprise today during the Fed interest rate decision and the press conference is generally negative for the S&P 500, negative for the S&P 500 bulls, especially if this technical level is violated, 61% of the Fibonacci retracement. So I'm leaving you with this free markets analysis just ahead of the Fed interest rate decision. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.